Okay, so welcome to another video. In today's video we're going to be looking at gold, which is one of the key markets and ideas in the latest weekly macro technicals report. And so, those that have followed me on Twitter, you would have seen that I put up a pretty interesting chart of short-term gold sentiment from Centix, and the key message there was that short-term sentiment right now is about as bullish as it gets for gold. And usually when I get to these levels, you tend to have a little bit of a short-term correction, pullback, pause, whatever you want to call it. So if we look at the first chart here, we've got gold on the weekly chart, got a little bit of a short-term downturn trend line here. The key point for this is basically here's, in terms of trend lines, here's where resistance is going to kick in. Also in terms of levels, 1250 is obviously a critical level there. The next key level is 1300, but I probably won't even get time to worry about that. Key point is that it's coming up against a couple of sources of resistance there, so that adds another nail to the coffin. Then of course you look at the next point, which I talked about here, to come to the overall technical view, is gold price versus its implied volatility. So this red line here, think of it as the VIX for gold. So we know how it works in the equity market. When you get spikes, it tends to be a bottom. When you tend to get the complacent periods, the lulls, that's usually a top. And for gold, for the most part, that seems to work. So the first point to notice is you look at gold implied volatility, it's down pretty low at the moment. So let's look at the other periods where it got this low. So just around here, just prior to that really big fall in 2013, and then in here 2014, the short-term top, and and certainly in the most recent the short-term peak, the gold implied volatility had gotten pretty low as well. So when you add up very complacent looking gold volatility, that stretched bullish sentiment which I talked about at the start, and the fact that it's coming up against multiple points of resistance, that's pretty much why we get to this overall technical view, just stay cautious. But at the same time, if we do get to break through that level, that's going to be pretty bullish. So, and the reason I say that is not just to hedge the opinion, as they say, but also to think about risk management, because, it's one thing to have, multiple different data points and evidence to support your view, but then, if you can always still be wrong, and so you need to think about where you manage the risk. So if you're going to go short, this is around about the area that if you see it start to break out, that you want to quickly reconsider that kind of action. So I'll leave it there today, and if you have any comments, complaints, questions or requests, leave them in the comments below, and make sure you subscribe to the channel.